Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Great to have you here. Hopefully everyone got a chance to catch the, catch the Sunday Notes live show. I'm trying to find my darn charts. There we go. Hope everyone got a chance to catch the Sunday Notes live show. Of course, the notes for the week for members in the options room, the futures room, and of course, my Sector Secrets Mastery are in the alert section. So if you haven't checked those out or had a chance to check out yesterday's replay, you can catch it right over at the Simpler Trading YouTube channel. Well, 1,250 of you have already, so go check it out. And let's go ahead and jump into what we've got going on today, this week. Today, well, about 6 minutes ago, FOMC Williams started speaking. Frankly, don't know what he's going to talk about and really don't care as much as I'm interested in what type of market action, what type of volatility he may or may not create. So far, a big cup of nothing, right? So far, not a whole heck of a lot. The market seemed to have just sort of froze. It does look very, very quiet, actually. I'm going to double check that that's actually how quiet it is. Let's jump on over to the Trading View charts for a moment. Let's take a look at those 5-minute charts. And survey says, yeah, pretty quiet. Pretty quiet. Not a whole heck of a lot going on at the moment. So what we have really is just the market waiting for, what is it that is going to be the catalyst for possibly for today. So with that being said, and I'm not sure, I'm having a little bit of a weird feed intraday. We'll have to sort that out before the bell rings. But nonetheless, let's take a look at the daily time frame here, which is on the screen. This is a downtrend, gang. We've been in a downtrend for some time. If you've got the trade flags running on your chart, now the free layout that I give everybody with the free version of the tools that are available are in the room drives of the day trading room, futures room, options room, Sector Secrets Mastery, and I think they're in the training room as well. So if you want to grab that free version, I have some premium tools or premium version of tools running on my screen, but if you want the free version of many of these tools, check out that layout that we've made available on Think or Swim. All right, so let's get to the questions for this morning. Looking forward to those. Had some great questions yesterday in the Notes Live show. So let's get to it. Can we take a look at, hey there, Tracy, can we take a look at coin? Sure. So typing in coin, taking a look at coin, downtrend, still in a downtrend, been back and forth in a downtrend throughout 2022. Been looking for just shorting the rip. And the few times, let me grab the drawing tool here. The few times that we've gone neutral like that, the idea is to maybe find a 1, 2, 3. And you notice that that has not organized. So even in those brief periods of time where we've gone neutral on the overall trend, we haven't triggered the pattern that is a high probability setup for that 1, 2, 3 reversal. So this is still in short the rip mode, Tracy. Thanks for the question. Keith, what are my thoughts on puts on Abbott? All right, puts on Abbott. Yes. Like the puts on Abbott, this is short the rip. Short the rip in the options choose your own adventure is on the rip as we reach a ceiling, preferably a Darvis, 21 propulsion. The wave itself, we want to get long puts with that bullish momentum. And I would like to see it get a little bit higher. We're basically still hovering below the 13 EMA, 13 propulsion. So I'd like to see something closer to the 21. This could be considered fairly aggro where we are here around 110. Where are we right there? About 110. 35, 110.30, that area, Keith, that would be pretty aggro. Aggro meaning, what am I saying when something is aggro? It's not about probability, it's about position size. I think a lot of people hear aggressive, moderate, conservative, and presume that that means low probability, better probability, best. We always look for the best probability, but it's really more commentary on position size, not probability. So keep it aggro. And I do like Abbott also into that move. All right, next up, any buy the dips out there? William, so if we're looking at buy the dip, let's go to the multi-chart here. If we're looking for buy the dip, what we want to do is start off with preferably a sector, a tide that is in some kind of uptrend, or at least bullish for any number of reasons. Probably some of the best corners for that start with XOP and FCG. All right. Now you might say, Rog, XOP is not in an uptrend, but look at the boats in this tide. Any one of those double greens on a dip, William, there you go. What else do we like? I mentioned I like FCG. Now, by the way, when I write out the notes for you all, one of the things that I do not do, right? Because a lot of folks ask, Rog, what are all the sectors doing? And here's what I'll tell you. We shouldn't care what all the sectors are doing any more than we should care what all the stocks are doing. We don't want to cast a really wide net. If I just make commentary on, a dozen sectors and 24 stocks, that's 36 different potential ideas. I want to be a lot more finite, a lot more specific than that. And that's what you'll notice are in my notes. So if you haven't checked them out, check them out. And William, the corners of the market that have been in uptrends have usually been around the commodities, around the inflation narrative. That got hammered in April. As the dust has settled, what we've noticed are that RBOB gasoline and natural gas continue to be in very strong uptrends, hence the emphasis on XOP and FCG. Now, if we want to go a little bit more broadly, commonly traders will ask, well, Rog, what about XLE? Not too bad, but you notice how XOP had far more double green. And you'll notice that some of the XOP names are actually showing up in XLE as double green. So this is where it's sort of a misconception that we want to go into XLE, because that's just a simple misunderstanding of why our energy is higher. It's not on crude oil. It's on RBOB gas and natural gas. When you understand that, as you all do now, you know that you can be a little bit more granular about, okay, what stocks specifically are going to benefit from strength in gasoline and natural gas. So those are some really good bullish corners of the market. Cast your net into some clarity in terms of at the sector index level, and you'll be able to find better opportunities for buys. Now, I don't want to neglect short the rip, because healthcare just rolled over, right? We have some interesting double reds in healthcare. We also have the SMH, which is just so, look at all that red. Beautiful, right? Trend up, trend down. Trends up are easier to trade. They're more organized. They tend to be a little less volatile. And when they are volatile, more often than not, they go parabolic. So they just hit the rocket, just kind of rocket launcher higher, which is easier to trade if you're already long. Great. It's making more progress quicker. Downtrends are trickier because the short squeezes and the retracements, the corrections higher, tend to be far more volatile, because there's still, even in a downtrend, there's still the psychology of, well, I'm going to pick the bottom. Please don't, especially if it's double red. And so that's where that nuance of having a neutral trend versus a downtrend is going to make such a difference. And you're not going to wander into just terrible, terrible corners of the market where you think you can pick a bottom, but chances are it's very low probability. All right, next up, Christian asks, can you speak a little bit about the statistics of the opening range? I have no idea. I don't look at the market that way. I look at the statistics on the trades that I take. So, Christian, I'll be frank with you. I don't know, and I've actually never really cared, because it really only matters what statistics I have, as far as, let me explain why. Because it's a fair question, it's a common question. let's say I look at the opening range break. And for those who don't know what Christian's asking, thank you for asking, Christian. If you don't know what he's talking about, I'll show you right now. So we go to the 5-minute time frame, and let's pull up, the S&P. All right, pull up the S&P, and we'll just go back to Friday. All right, so let's go back to Friday. All right. So every single setup, and if you've been following my work here at Charts and Coffee, any of my free videos, a Sunday night show, you know that everything is predicated on what first? Structure, structure, structure. What is the structure of the market? What is the underlying bullish, bearish, neutral, right? What are we dealing with? And that extends to 5-minute timeframes as well. That's my preferred intraday time frame. So first of all, to play an opening range, I've already made some decisions based on a weekly and on a daily as far as what the path of least resistance is, what that line in the sand or what day trading sentiment for the morning is. That's even before I get my opening range, right? So I've already got a decision as far as which way I'd like to trade. Then comes whether or not we get the opening range trigger. And if that trigger is against the sentiment, I may choose not to take the trade. So right away, I'm not looking at 100 clearing range, opening ranges, and just saying, okay, what were the percentages? Of those 100, how many followed the directional bias? How many gave us the actual breach of the range? How many might have already bottomed out or topped out with a stochastic or a V-score or my hourly price movement ranges before then, and we had a trigger before the opening range even began? So that's what I mean by that. I have no idea, my friend, because that's not how I look at trading. I don't look at trading of, here's 100 instances of just this pattern. No, it's 100 instances of this pattern under the right circumstance, right? And that then becomes my win rate for my trades, right? That then becomes a much more discerning number. So I appreciate the question. Under what conditions is it better? Perfect question. Neutral. Neutral or favoring the directional bias that we determined before the market opens. So I hope that helps. Thoughts about, well, if I'm going to look at GLD, JR, I'm going to look at GC, right? We're going to look at GC. And if y'all are looking at something other than the daily, do let me know. GLD so GLD and GC are going to be tied together, right? So GC just went double red. So yes, any thoughts about a bottom? So no. So if we've just gone into a downtrend, we know the path of least resistance is lower. However, the thing we need to watch for, JR, is, first of all, to your point, are we going to stop here, right? Or here? That's your Darvis zone right in there. Right? You can see the Darvis zone. So that might be a layer of support. I'm far more interested, though, in at what point real yields or real interest rates are going to start moving lower. Because look, the best way to answer that, my friend, is where is the bottom in gold? Wherever the top is in real yields. So keep an eye on that. You can chart that real yield chart or graph. It's the nominal yield of a bond minus the rate of inflation. It's a number of places you can look at real yield charts, find them online, and that's what I would look at. But the last thing I'm asking myself really is, where's the bottom in a downtrend? Any more than I'd ask myself, where's the top, right? But great eye on the downtrend. Now we want to short the rips, keep an eye on real yields, and keep an eye on those two Darvis, because this is a fresh downtrend. So there's not a lot of traction yet. There's not a lot of commitment yet. So if there's going to be a quick transition in that very fresh downtrend, probably this week would be it. So keep an eye on those levels. Keep an eye on the real yields. All right, moving on to Stan asks, can we take a look at SWK? Sure, Stan. Short the rip. Much more established downtrend, short the rip. Just that straightforward. Identify downtrends, identify where the 21 or even the 13 aggressively is plotting, preferably with the propulsion tool, which we make available for free over at the countdowntrader.com. So head on over to countdowntrader.com, download the propulsion. It's taking advantage of the 8 exponential crossing the 13, interacting with price in a very specific way, lighting up those dots, giving you a higher probability view of just rather than slapping an EMA on there and just putting those moving averages all over your charts. Notice I only have 3 moving averages and they're all my wave. Everything else is propulsion. It's an intelligent, self-correcting moving average. It takes advantage of the classic EMA crossing technique. And again, free over at countdowntrader.com. All right, moving on to, do I see GPC as an outlier and a possible buy? So, it's always an outlier to what, right? So that would be the first question. What is it an outlier to, right? What's the group that this is going to be an outlier of, outlier to? So then when I think about outliers, the first thing I'm going to ask myself is, okay, Rag, where is GPC hanging out? If it's in a pond, who's it in a pond with? So if you take a look, I don't know that GPC might be a really good example of a honey badger, because I can't think of a liquid ETF that, you want to head out, girl? All right, girl, give me a few more minutes. 3 more. My dog wants out. Come. Hang out the floof. Got 3 more minutes of the show. All right, you can probably see the dog chilling out back there. Oh, she heard daddy's home. All right. Okay, so GPC would probably be, and for those of you wondering, who the heck is she talking to? My dog. I don't know if you can see her little tail going back there. The dog. So it's probably a better example of a potential honey badger, but a honey badger has to be not only minimally weighted within major sectors in the indices, but it's got to be in an uptrend. So I'd have to say no, because an outlier has to, at some level, either be a really great example of an uptrend or a really great example of a downtrend, leading the charge in one direction or the other. Thank you for the question, William. Really great question. Okay, MSTR, sure. Hey there, Rob. Downtrend, short the rip. As far as how soon, it's probably going to be about 307, maybe 300 if you want to be aggressive. But this has gone parabolic in terms of distance the price is from the wave. A little tricky. So what might be kind of cool to do with MSTR is something similar to what we were just doing right now with William's question, which is, where is MSTR in the overall expanse of things, right? Where is MicroStrategy? Now, I know MicroStrategy's got its own thing. I don't know if you're just going to look at something like CRPT or BLOK or maybe BITQ. I'm trying to think, but yeah, this is when I look at MicroStrategy, I don't know what Sailor can say or do, but this is just going to probably move fairly sympathetically with Bitcoin specifically. All right. So thanks for the question, Rob. Trader Momo asked, indices, heat map, stock, solid green. I'm NQ long early this morning. Am I wrong? You said NQ in a downtrend. So if you're looking at NQ intraday, that's a different conversation. I can't quite gather from your comments, Trader Momo, which way you're trading. Are you wrong? I don't know. You're asking me where the market's going to go? Nobody knows. Remember, gang, nobody knows where anything's going to go. We only know what we want to do when it gets there, right? So that's why I'm not going to ever kind of clickbait you all with some crazy target like, oh, the NASDAQ's going to, 12.5 or the NASDAQ's going to 11.4. Those things get our attention. But, what we want to remember is NASDAQ's in a downtrend. If you've got to buy, cool. I'm sure some folks during the Asian session took an 8 o'clock, buy and rode that higher. So I really can't answer the question. But remember, yes, I'd rather be trading with the directional bias of the day. And today it is bearish for me. right? Doesn't mean that there may not be buy opportunities, but I find for most day traders, if they can have a process, which is what I've honed over the decades that I've been day trading, if they can have a process to not necessarily be a two-way trader, to be able to say, you know what, it seems a higher probability trades are going to be down today or down this morning, or the higher probability trades are going to be up. If we can eliminate one side from contention and we don't start the day open to being a two-way trader, unless there's a significant gap, that's about the only exception. You're going to find you'll trade less. A lot of day traders tend to overtrade for two reasons. They don't pick a directional bias and they use market orders. Most of the time, day traders who lose, the number one culprit for a losing day trading account is overtrading. So that's why we embrace the directional bias. That's why we embrace using conditional stop and limit orders, because it directly attacks the number one culprit for most day traders losing money. So I hope that helps. All right, gang. And just like that, gosh, time is up, but I really appreciate the questions. Thank you as always for tuning in for our Charts and Coffee show. And gang, remember, I post the link far in advance, and it's usually already available at the Simpler Trading YouTube channel way in advance. And I mentioned that for those of you that want to get your questions in early. I do want to get to those questions. So if you want to log in a little early and get those questions out, I go right in order. So as we wrap up, hey, take a moment to smash that like button, leave your comments, leave your questions below. I appreciate the conversation, the dialogue, the questions, the comments. I check them out every day. So smash that like button, and I will see you all tomorrow, 9 a.m. Same time, same station. Be good to each other.